In this video, we're going to see the power of Intermarket Divergence Pro. We have the 30-year Treasury bond, which we are currently trading futures. We have UTY, which is the Philadelphia Utilities Average. We have the Dow Jones Utility Average. And we have the Fidelity Advanced Bond Fund as our intermarkets. Now our next step is going to be to add our strategy. So it's MAR InterDiv Position Pro. And now the first is this interset. Interset is how we test the different intermarkets. One of the advantages of this tool is you can have up to 50 intermarkets in TradeStation. And because you can do that, you can actually test 50 different markets to see which one is the most predictive of the 30-year Treasury bond or whatever other market we want to trade. For example, you can predict crude oil using different oil sector stocks. So we're going to go from 2 to 4 because we have 3 intermarkets and data 2 is the first intermarket. Type. Now, the Intermarket Divergence Pro product uses 2 different types of momentum to tell us whether the market is in an uptrend or a downtrend. So 0 and 1 tells us whether we're using a simple difference or price relative to a moving average. Now, the way this works is bonds prices are positively correlated to utility stocks and to bonds themselves, bond prices. So we're looking for a positive correlation. So intermarket divergence means that the markets are not moving as expected. So if utility stocks are in an uptrend and the 30-year Treasury is in a downtrend, we would expect the 30-year Treasury to go up, and we'd buy. Okay. Let's now optimize the periods that we're using for the momentums and the moving averages. We're going to go from 2 to 30 in steps of 2. We're going to go from 2 to 30 in steps of 2 for the intermarket. Relate is 1. We said these were positively correlated. Now, interlong and intershort are very powerful tools that we can use. This is the filter that is used on the entry signals. So we could now just enter when the close is less than the open. This close is less than open to buy and close is greater than open to sell happens to be a very common filter that Larry Williams used in his long-term secrets of short-term trading. The long exit and short exit being false means that we don't use some sort of special exit. We are just allowing the system to be stop and reverse. Hold means -1 means we allow the trades to just stop and reverse and we don't interrupt the trades for a certain holding period. This interstop is going to be used. This interstop is going to be used, and that's going to allow us to test entering on an opening range breakout. But for now, we'll set it to 0, which means that variable will be disabled. Now let's look at our properties. We're going to add slippage and commission. We'll use $15 for commission and $31.25, which is 1 tick for slippage. And now we're going to run our optimization.